Hello and welcome. You're watching Money 9. I'm Sakshi Batra. Well, when we talk about wealth management, it is a significant part of everyone's life, but it is also often left unattended. And that is majorly due to lack of awareness sometimes. Now, amid this COVID 19 pandemic, when everything is uncertain, managing your wealth correctly becomes even more important. On Kaise Bachaye, Kaise Badhaye, we catch up with entrepreneurs in the fintech space that are doing just that, helping all of us save, invest, and grow our money to live our life goals more effectively. On the show today, I will be interacting with Mr. Saumya Shah, founder of Tarrakki, which is a comprehensive wealth management platform that offers solutions like strategic advisory for equities, mutual funds, P2P lending, and much more. On this edition of Kaise Bachaye, Kaise Badhaye. Welcome, Soumya, and thank you so much for taking out time for this interesting discussion on Money 9. And let me kickstart by asking you with the basics first. Now, all of the investors, viewers, first-time investors watching this show, wanting to seek some insights on wealth management from you, what should an average Indian investor really understand by the term wealth management? And should even small retail investors really think about accessing professional wealth management services or not?
Thank you so much for inviting me on the show. Excited to be here on Money 9 today. It's a very apt question which you've asked, and this is something which is, I think, the most common question which we get here at Taraki. Now, when you look at wealth management, if I had to put it in layman's terms, it's just
Yeah.
simply a process of defining and achieving your financial goals. Now, this financial goals could be something as basic as saving for a rainy day, buying a new car, or buying a new house, or saving for your retirement, which could be in 20, 30 years, which could be 20, 30 years from today. Now, irrespective if you're a small retail investor or an HNI investor, one key, I would say, a significant key to unlocking this and achieving your financial goals is definitely to consult an advisor. It's a slightly gisa pita saying which we've heard it several times, where you should always consult a doctor when you are sick. This same way, it still applies today, where you should consult a financial advisor when you're planning for your long-term goals. The reason being, it is not everyone's full-time job to keep a tab on their finances and their investments. But as a wealth
Yeah.
manager, it is our full-time job, and that is where it comes in. Irrespective if you're a small investor or a retail HNI or an HNI investor, you should consult an advisor. Reason being, they can draw out, they can define your financial objectives, financial goals, and then they can allocate the right asset classes for you. And something which I want to definitely stress a lot today here on the show is in the last 4 to 5 years, we've seen a lot of do-it-yourself platforms. But the
Yes.
major challenge which retail investors face is when they make an investment based on the historical returns of the fund. The moment you do that, the biggest challenge and the drawback arises is your financial goal might not be linked to the investment which you have made. So do it yourself is wonderful. We encourage everyone to do it themselves. But there comes this combo where you can get a fixed fee advisor for even a monthly fee of 300, 400 rupees, who can advise you and who can help you create that entire chart where you can align your financial goals to your long-term maybe retirement or to the investments which you are making. So if I had to
Well,
summarize in one line, yes, please do consult an advisor, irrespective of if you are a small retail investor or an HNI, and create a financial plan for you.
right. Now, let me take a cue from what you just said. A lot of us out there do have this concept that, if I go for professional wealth management services, I have to really shell out a lot of money. And which is why most of us really choose to do it ourselves. Now, while you encourage that, help us bust that myth, if you will, because you just pointed out by saying that, you just need probably under 500 rupees to get yourself started into investment. So help all of you. I'm sure this will be an interesting thing for them to know.
Sure, absolutely. So when you look at a lot of do-it-yourself platforms, all of us, and when you look at the Taraki, we have a do-it-yourself platform too. But along with the do-it-yourself platform, what we've come up with is, let's say, a plan like Taraki Pro. It's a subscription plan, so you pay a flat fee. We are not incentivized by any trail commissions. It's all direct plans, and you pay a flat fee, which is as less as even 300, 400 rupees a month. Now, what this ends up ensuring is, instead of making random haphazard investments and doing it yourself, there is, I would say, there is a teacher come an advisor who is handholding you and who's guiding you, taking in and making sure that you're taking the right steps. So that's a big myth where you feel that where you need a lot of money to get a financial advisor. In today's day and age, we live in a age where it's all driven by technology. I will not be coming to your office on there's no transportation cost. I'm not filling out a form for you. It's all digital. So as firms, we are saving a lot of money by taking it digital, and the end benefit is something which now gets passed on to you as an end user, where you can avail low cost premium subscription services for your investments.
That's very interesting. And since you talked about your platform, help our viewers understand a little bit more on how you got started at Tarrakki and why you launched it, despite the kind of flurry of fintech firms being out there in this space. Of course, we are very underpenetrated when it comes to financial planning, financial services, and fintech platforms are really helping take financial inclusion. Cover that huge gap that exists in financial inclusion in India. But specifically, what is Taraki really aimed at demographically? If you could help us understand who are your consumers? Is it largely the millennials? Is it also the older people? Geography-wise, if you could help us understand, and are you seeing more interest also developing in say tier two, tier three cities for wealth management too?
Sure, absolutely. So before jumping on Taraki, I'm just going to take a step back. I'll say, like, for me, Taraki started back in 2008-9 when I was in my first year of college. That's when I gave my AMFI IRDA exam, started distributing wealth products. So I was 18, 19 years old when I was distributing wealth products. And
Okay.
that's, I would say, the beginning foundation of where Taraki was laid. Of course, institutionalized and conceptualized, like as a tech platform, happened in 2018 when I moved back from the US. That is where I
Yeah.
understood in 2008 I could go door to door to distribute products. But in 2018, if I have to, as you rightly said, it's highly underpenetrated. Like 3% of India
Correct.
is investing right now. If it has to move up to, let's say, 13%, which China is at right now, I cannot be going door to door. I need technology to enable masses. And that is how I would say Taraki as a concept and idea was formed in 2018, where we decided to embed technology and wealth at one place. Since then, of course, we've launched mutual funds, we've launched alternative investments, we launched equity advisory, which is again a subscription-based product. We are in the process of adding deposits and gold as well on the platform. So the idea is to build a full stack wealth management platform where once you're on Taraki, you don't need to download 5 apps, let's say something for your deposits or something for mutual funds. You don't need separate apps. One app can do one, a single app should be able to suffice for everything. So that was the core idea of Taraki. And we had a very strong emphasis where we wanted to go after millennials or early earners. When I say early earners, when you're in your first job, or let's say even we have a few folks on our platform who are even in their last year of college doing an internship, saving some money and doing an systematic investment plan. So
That's
that's
right.
the target audience which we are going after. And the reason being, from day one, we want to educate them that financial services is a low cost product. You don't need to, I would say, heavily invest in, or you don't need like fancy advisors. You can subscribe to a product and you can build you can build for your financial goals. So I'll say that's how Taraki was started. And now from a demographics perspective, we are pan India, and majority of our target audience is and majority of our users are below 35, 36 years old. And the most common goal which we see on Taraki right now is either retirement planning or buying a new home. So I would
Yeah.
say the youth in India is focusing on is saving to buy a new home. So that's a core learning which we've had. And one very important factor which we have now, especially during the pandemic, so it was a very big learning curve for us. In the pandemic, we learned that there are a lot of businesses who have surplus money in their current account. These are small and medium businesses. So what used to
Yeah.
happen is on the Taraki app, we used to have proprietors who are trying to create an account, but we only support individuals. So I'm very excited to say that we will also be launching a platform called Elivo next month, which will be a completely digital platform for non-individuals, right from a private limited company to a proprietorship firm to even minors and HUFs. Everyone will be able to digitally invest in Elivo. So we are very excited about that as well. And so yeah, Taraki is not just for individuals. We are focusing on individuals, non-individuals both.
Right, Soumya. Now, it's very important that we are having this conversation since you also said that India is very less penetrated when it comes to investments. We only have 3% people investing really. And there's a lack of awareness when it comes to not just wealth management, but also financial planning. And this is when we are seeing the advent of even new asset classes, just like how you talked about the alternate investments, REITs, InvITs, and NFOs are coming up,
Yeah.
cryptocurrencies, all of this is coming up. So financial literacy becomes even more important at this stage. What do you think can be done to reduce the huge gap that exists in this space now?
So I think the huge gap will uh, be, I would say, eliminated. One, I would say technology is going to play a massive, massive role. And the second is the increase of financial literacy, which is happening. And I'll give a very short example. On the Tarrakki app, we have a learn section where we post about financial literacy. Of course, it's, I would say, a very small audience compared to the target audience which is there. But what excites me the most is fintechs. There are a lot of teenage neobanks which are coming up. Now, when you
Yes.
look at any of these teenage neobanks, they have a very strong component of financial literacy which is embedded in the platform, which we will see over the next 1 or 2 years mature.
Okay.
So when a 12, 13-year old on those platforms is getting the right financial literacy, I think that bridging that gap from a 3 to 13% with the help of technology and the right financial literacy, we will get there. And like I would say, I wouldn't be surprised if in the next 5 to 7 years we would be out there. And the second major factor, which I see, is the decline of interest rates. Earlier, when you look at investment, Kia, if you ask this question to someone who is 40 plus, 50 plus, the general response you get is, yes, I have an FD with XYZ bank, or I have a deposit
Mhm.
with XNBFC. Now that deposit is not an investment. This is where that interlink, I would say, interlink between financial literacy, because because deposits are not an investment. When you look adjust it for inflation, you're not even beating inflation or getting the
Mhm.
right returns. So now people are understanding that, especially in a declining interest rate environment. So not only teenagers, but we see a lot of people, even 35, 40 plus, who are getting now more and more inclined towards their finances, because we've
Yeah.
learned fixed deposits is not going to be that the answer in the long run. So we'll see a
Sure.
lot of asset classes which will come up. And I see financial literacy also playing a major, major role for us to go from 3 to 13%.
Okay. Also, not just that, but even new investment products are coming up. And you also recently entered in a partnership with Small Case, which has recently become a
Yeah.
talk of the town as a new investment product now. What will you be offering to investors out there under this partnership? Help our viewers understand, how do they stand to benefit as a new investor, a first-time investor wanting to take a plunge in the stock markets, which are already at record high levels.
Sure. So I'd say the small case partnerships are something which was very close to our heart. And the massive demand we saw was the simple answer of 14 million new demat accounts which opened last year. Now, if there are 14 million new demat accounts that got opened, I'll link it to the first question which you had asked about a small retail investor and an HNI. Like, majority of this was driven by small retail investors. Now, when you look at small retail investors, getting the right investment advice is the most important aspect when it comes to investing, because we love living in an age where executing a transaction is absolutely seamless, but getting the right advice was not seamless. That is where we partnered with Small Case, and we have a model portfolio for our equity advisory product. So, as I said,
Okay.
a lot of asset classes are evolving, and now we see a lot of retail individuals who want to participate in buying direct equities. So
Yeah.
we built a model portfolio which can be availed at a subscription cost of, again, 500 rupees a month, 550 rupees a month is something which you can avail it at. So it's
Hmm.
a extremely low cost product, but in that low cost product, you are getting well researched, unbiased investment advisory. So it's all
Yes.
well researched stocks which are there as a part of a portfolio. We have like a very qualified team who's built the model portfolio, who's working day in, day out on the model portfolio. And this high quality advice is now available to small retail investors as well for a very low price. And the beauty about small case is you subscribe to the product and the execution becomes flawless through your broker. So I think it's a perfect combination of well researched advice with strong execution, which we can offer alongside small case. And the goal is, as I said, if you're getting from 3% to 13% of the overall population who's investing, there has to be very simple, unique products, low cost, unique products, and that is the focus which we strongly have over here at Tarrakki.
You're right. There's one word that you use that I was very interested in coming at in the next question, and that is, unbiased advisory, because that is something that all the investors really need to be assured about. Because so far we have seen so many investors getting impacted by mis-selling, biased advisory, which has
Yeah.
led to negative growth in the customers' portfolios as well. So, how do you ensure that happens?
The key to ensuring this is creating a split between the advisory aspect and the execution aspect. Now, when you look at it, if I am advising you something and when you execute it, if I'm earning an income on it, then there is that always a bias where I would want you to keep on executing more and more. So let's say I would
Yes.
recommend you company X, company Y, company Z. So the more you execute, the more broking revenue or the more revenue I can generate. Over here, when you subscribe to our model portfolio, irrespective, it could be any broker of your choice. We are not making any money when you execute a trade. We are only making money when you renew your subscription with us. So my biggest interest here is to make sure that I give you the best quality advice so you keep on renewing the subscription. So, as I said, execution and advisory, when you separate both of them, that can definitely help in creating an unbiased atmosphere for retail investors. And that's why we have always like we are not into the broking space, we are into the advisory space where we want to give you the best possible advice and you can execute it at your broker.
Well, I hope this really helps all our viewers out there looking for, unbiased advice and the best-in-class wealth management. And for sure, you can definitely go on to Tarakki's website and see for yourselves as to what the platform really has to offer to you. And this show is really to bring all the fintech platforms, all the new things that are going on in the fintech space to all our viewers out there who are looking to get started on the journey of, say, financial independence or financial freedom. And that's how you get started, because when you start to manage your money in the best way possible, and that's when you get to see all your dreams getting fulfilled and your life goals getting realized as well. Thank you so much, Saumya. It's been a pleasure speaking with you and seeking all these insights on wealth management. Thank you so much for taking out time for us.
Likewise, thank you so much for your time today and having me on the show.
All right, thank you. And with that, we wrap up this edition of Kaise Bachaye, Kaise Badhaye for all our viewers. But we'll keep getting you such interesting conversations, everything that's buzzing in the fintech space on Kaise Bachaye, Kaise Badhaye. But do stay tuned for a lot more on markets and personal finance on Money 9.